Hi guys, welcome back to the channel. My name is Dave and welcome to the second edition of the first ever annual Apple Awards. Now we had the first edition just a couple weeks ago where we talked about covered call ETFs that were based upon the S&P 500, sort of. And those products tend to be a little bit more defensive in nature when it comes to what's in them. And then they sell covered calls, typically against the index, but we had a variety of products in there. But I wanted to separate those from these products that offer just a little bit more volatility and tend to be based upon the QQQ or more large cap growth. And you'll kind of, maybe there's a method to my madness that you can follow along with as we talk through these. Now, they follow the same Apple Award distinction, so I think we'll be okay. We can handle this maturely.
Isn't that right, Mr. Poopy Pants?
But feel free to blend these products together with how you see fit. In my mind, it just kind of works better if I separate these into different categories so I don't become over allocated to one area versus another. So that's kind of the method and the idea behind this, and we'll talk through that as we go through this. So anyway, if that is what you're looking for, please stick around. So as I mentioned in the opening, I like to categorize some of these products. I don't want to become over allocated into one area. So I'm thinking S&P 500, then I'm thinking tech and Nasdaq heavy products. So Bally kind of could be in either one of those. But when I'm buying the product, I'm thinking mainly about the underlying stocks that are in there. And this is large cap growth, which is going to be very Nasdaq heavy. Versus the S&P 500, which is a little less Nasdaq heavy, right? So I put this one in this category, but it blurs the lines, right? It certainly could be in either one, but I went with this one. So we're starting with Bally, not because it's got the fewest apples, which last time I did it by apple, but this time I'm doing it alphabetically. So we're going to work down through this list. So BALI comes to us from iShares. It's the Advantage Large Cap Income ETF. Its inception date was 9/26 of 23. It's got $191 million of assets under management. It pays you every single month. The expense ratio is really attractive, 0.35%. I know I always bring that up. Some people it doesn't bother. It really bothers me, so I like to keep those expenses low. Over the long run, that will really pay off for you, I believe. So again, this one has returned 15%. That does not include the 7% yield that it's showing over here. So it's been a pretty good performer this last year. It uses index call options and futures. So it does a combination of things here. It owns about 150 stocks. It selects large cap stocks. It's selective, actively managed. It also has a little blur in there. I'll put it up right now about IPOs, that it has the option to throw in some IPOs. So that's kind of a small, kind of odd addition to this fund. I do own it. I've owned it for quite a while. As far as apples, I'll just throw it up there right now. 4 apples for BALI. It's been a good performer. I like this product. Again, at the very end, we'll summarize all of these together so you can kind of see them side by side, along with what the underlying is, what the option strategy is. But again, this one could be in either, and the reason I say that primarily is because it does use S&P 500 index options that they sell out about a month. So if I pulled up the holdings right now, you would see the S&P 500 index options that it has for December and January, selling about 30 to 60 days out of the money, slightly out of the money. And then you'd also see some futures contracts on the E-mini S&P 500. So it's using, think of it like I own a bunch of stocks, then I have exposure to the futures of the S&P 500. So I hope that goes up. But I'm going to use that as kind of my long position, then I'm going to sell calls against it. So when I pulled up the holdings currently, they had those December and January contracts at 2 different strike prices. So 4 sold options altogether, trying to generate that income that it can distribute. So you get to participate up to that strike price, but then you also have the futures that you can ride as well. So you might have gains, might have losses from a tax standpoint with Bally. Both the futures and the options should get 1256 contract tax treatment, so it should be tax efficient. The end of the year, once we go into the new year, I hope to summarize all this information together and see exactly how the taxes are handled for each and every one of these products that I own. And I'll share that information as well so we can see which ones are the most tax efficient for people that are looking for tax efficient products. But anyway, that's a quick summary of BALI, which again I own, and it's a 4-apple ETF in my opinion. Next up is FEPI or FEPI, the Rex Fang and Innovation Equity Premium Income ETF from Rex Advisors. I reviewed this about a year ago, and it's about a year old. Inception date was 10/11 of 2023. It has $424 million of assets under management, pays you every single month. It's got an expense ratio of 65 basis points. It's a little bit on the higher end for this group, but not too terrible for what they do with this fund. You can see the price return over last year down about 8.5%. That is offset by the fact that its yield is 26.66%. Now, I do own some shares of FEPI. I bought those initially. It's kind of an interesting fund to me. I wanted to see how it developed. It's been doing okay, and I keep it in my portfolio, but I haven't really added to it. So in this case, from a tax perspective, it's selling individual calls against all these positions that it has in the portfolio. So it isn't going to be very tax efficient. There might be a return of capital that might offset that. We'll see what that looks like at the end of the year. Again, I'll summarize all that at the end. Now, how does it do all that? Well, it's going to equal weight about 15 to 30 stocks. I'll put the list up here right now, and it rebalances those every single month. So if you think about Tesla, for example, since the election, Tesla was up about 100 and some percent since the election. So over every single month, it's going to rebalance and it's going to bring that back in alignment. So during periods like that, it might hurt you a little bit in this fund. But during periods where you have other tech stocks in here that are not performing well, it's going to benefit. So there's going to be some offset there. But I think that's one of the things that makes this attractive to me, that it's actually rebalancing that on a monthly basis and then selling out of the money calls against that. So this is a managed ETF. They sell out of the money call options on every position in the fund. And if you look at what they have right now, again, I'll put it up here and kind of slide down through it. Lots of out of the money calls against lots of positions right now to generate that income. So overall, it's performed pretty well, although you see that price return does not look so good. So at the end, again, we're going to summarize all this together, grab some of that information and see how it's performing compared to some of these other ones. But I reviewed this last December, and again, I'll put the links for all those reviews down in the description here as well. So FEPI, another one that I own, a decent little fund. And I think I forgot to mention it, but this is a 3-apple award winner with FEPI. I still want to see a little bit more out of this fund, but overall it's been doing okay, but 3 apples for FEPI. Next up is GPIQ from Goldman Sachs. This is their Nasdaq 100 Core Premium Income ETF. It's the sister fund or brother fund to GPIX, which is my other category. That one's based upon the S&P 500. This one's obviously based on the Nasdaq. It's been out since 10/24 of 2023. It's got $325 million of assets under management. It pays you every single month. And out of this whole group, it's got the best expense ratio there at 0.29%, 29 basis points. So again, very attractive to me. It's got a 1-year price return of 13.23%. So it's done pretty darn well over the last year. And how does it do that? Well, this one owns the Nasdaq 100, and then it's actively managed when they sell these at the money calls that they sell kind of on a weekly basis. They layer these in out 30 days. So if you look at their holdings, you're going to see one each week going out about 30 days. And they sell these against about 25 to 75% of the assets. So that allows room for growth because they're not capping the upside against the whole fund. That's one of the reasons you see a 13% return here for this particular fund over the last year, allowing for some growth and some income with a yield of around 9.08%. So for me, that's very attractive. I like the combination of growth and income. This one gets 4 apples, just like its sister fund. I do own this. I blend this together with GPIX. I kind of balance it in my portfolio. That gives me some nice income from those 2 holdings, along with some nice growth. It does do this with flex options. That's not a big deal. It just means they can design their own options. They're designer options. And it allows them to set these up the way they see fit against the Nasdaq using NDX index options. Those allow those 1256 contracts, so it's going to be a tax efficient product as well. And again, we'll summarize all this together once we get all our tax information. Next up is JEPQ from JP Morgan. This is their Nasdaq Equity Premium Income ETF. It's been out since 5/3 of 2022, so we have a little bit more information on this one. It has over $21 billion of assets under management. It pays you every single month. Again, a pretty attractive expense ratio, 0.35%. They've done a good job of keeping that down there, 0.35%. So that's quite attractive. And you can see 1 year performance, 14.68%. So that's quite nice. It's done a good job this last year. Now this one is one of those unique ones that uses equity linked notes, just like its sister fund JEPI, which I don't believe anything's going to be qualified. So it's going to be short-term capital gains or ordinary income, I should say. So check your taxes. If it's in a taxable account, this might not be the best product for you. But overall, it's a very well-built fund, and I would give it 4 apples. 4 apples, just like its sister fund. Again, JEPI. These are ones that I've owned for probably the longest period of time. We have the most history with them, and they've done quite well. So again, this one that's selective, select large cap, and they give their self room to also add mid and small cap stocks if they would like to this fund. But it uses out of the money index calls using ELNs and the S&P 500. So similar to BALI, this one also uses the S&P 500, but I still put it in this category because it's the Nasdaq Equity Premium Income ETF. So it made a lot of sense to put it over here versus over there with the other one. So, and that's how I separate it. But again, a great fund that I've owned for a long time, JEPQ. Check it out if you're looking for that income. The yield on this one's been shrinking a little bit. It's down to 8.72%, but overall, nice growth and income. So now let's jump over and look at QDTE. This comes to us from Roundhill. It's the Innovation 100 Zero DTE Covered Call Strategy ETF. So a lot of people love that zero DTE option strategy, and this offers that just like its sister fund, XDTE. Now, when I reviewed that one, I got a lot of feedback. They didn't like that I gave it 3 apples. So just from that peer pressure, I took this one up to 3.5 apples. You guys happy now? We still need more time. This is relatively new. Again, inception date is 3/6 of 2024, but we'll see. I'll compare this one to all the other ones, and you're going to see since its inception date, it's outperformed all these other ones. So maybe it deserves more apples. We'll have to see. But it's got about $620 million of assets under management. It pays you every single week. People love that. The yield is 29.2%. It's kind of treading water, maybe trading down a little bit since this last couple of weeks were a little bit rough. But that very high yield offsets some of that performance, so we'll check that all out. Again, people love the weekly distributions, but I do not love the expense ratio of 95 basis points. So not my favorite when it comes to the expense ratio, and that's part of the reason that I give it a little bit less, I guess, in my personal view. It does use index call options, so it should be pretty tax efficient. Again, we'll summarize all that when we get that information. It uses NDX options to set up its underlying position. So it uses a synthetic long position. We've talked about that. Again, you can go into more detail if you watch my video on that, if you're curious about what that means. But they don't actually own the underlying. They do it via options, and then they sell covered calls against that. So deep in the money call option, paired up with zero DTE index call options on the Nasdaq on a daily basis. And then they give you money every single week. So people love it. And don't mess with that yield. Don't mess with somebody's 29% yield. I'm not allowed to do that on a channel that's related to income. They get very angry when you mess with their yield, so don't do it. So anyway, check out my review of this one. 3.5 apples right now. Would love to see a little bit more time, and we'll compare this at the end to all these products. Next up is QDVO from Amplify ETFs. This is their growth and income ETF, and it kind of rounds out their product line a little bit with DIVO, IDVO, and now this product. I'm a fan of all 3. I own all 3, but this one's brand new, so we only have a little bit of information on it. But again, I think they do a good job over there. Inception date is 8/21 of 2024, so brand new. Expense ratios 55 basis points. It pays you every single month. Assets are around 18 million. So again, brand new fund. Now, how does this one work? Well, it falls in line with their other products. From a tax standpoint, it might not be that tax efficient. It's going to sell individual call options against different positions they have within the fund. It also is going to use some index call options, as we will see. I'm giving this one 4 apples out of the gate because I think it's going to fit in well with the product line. You might be, it hasn't been around long enough, I know, but still based upon what I see, I think it could be a good product. So that's what I'm basing these opinions on. And as we get more information, we will adjust as needed. But the underlying here is a select basket of large cap dividend growth stocks. So in this case, they have about 50 to 60 different holdings at the moment. And then the option strategy on top of that is a tactical covered call writing on individual stocks, and then broad market indexes are also an option. So right now, just as an example, they own a MicroStrategy, right? Kind of a radical stock to own right now. They own MicroStrategy. They sold calls against that position. We'll see how that turns out. They also have sold calls against the Nasdaq 100 Micro Index. So there's some flexibility in this one, and we'll see how it plays out over the long run. But so far, I've been pretty pleased with the product, and I only own a small position, which is what I do with some of these new ones. I'll put it in my portfolio, see how it performs for a while, and then decide if I want to get more active with that particular product. But overall, pretty good product, good design, and Amplify has been doing a very good job historically. Now, from a yield perspective, I would expect QDVO to come in right around 6 to 7% on an annualized basis. Just doesn't show that yet because we don't have a full year under our belt. So this one will fall short of some of the other products that we're talking about. But this one's more about a combination of growth and income, since they're being selective on when they sell those calls against what products and when. So hopefully we see a lot of growth out of this over time and some income. Next up is QQQI from Neos. This is their Nasdaq High Income ETF. The inception date on this one is 1/29 of 2024. So again, a product that's less than 1 year old. But, I've talked to the fund manager over at Neos. I've reviewed this product. I've reviewed SPYI, which comes to us from Neos. It's been out a little bit longer. So these kind of fall in line. They kind of function the same way. But whether you're looking for the S&P 500, the Nasdaq, the Russell, they've got a product for you that they've developed out of these. So they've got a whole family that you can check out. And I've become quite comfortable buying these. I own all of those in small portions in my portfolio. This one's currently got $740 million of assets under management. It pays you every single month. The expense ratio is 0.68%. And it's headed towards about 11.5 to 12% for this first year as far as distributions go. So distributing quite a bit of income. It does that all through index call options, so it tends to be pretty tax efficient. Again, we'll summarize that all in the new year. The underlying here is the Nasdaq 100. It owns all those stocks. And then it's going to sell out of the money index calls around 6 weeks out into the future. It's going to do this against a portion of the assets to generate the income that it's looking for. And it's going to base that on volatility on where they're going to sell that strike price to. So they're going to sell out of the money, but they're going to determine how much of the portfolio they're going to sell against and how far out of the money they're going to do that. And then about 4 weeks into that process, they're going to roll out to a new strike price and a new expiration. So that's QQQI. That's also SPYI. Again, a nice family of funds. I give this one 4 apples, just like I did with SPYI. I think they're doing a very good job over there at Neos. So if you want to get into something, this is a great way to dip your toe into, and you have a whole family of products to choose from. And my last one for today is QYLD. This is the Global X Nasdaq 100 Covered Call ETF. It's been around a long time, which is nice. We actually have something that's been around for a while. Inception date is 12/11 of 2013. Expense ratio for this one is 0.61%. It does pay you every single month, like most of these do. Yield is around 11.5%. It's got $8.5 billion of assets under management. I do not own this one. It's the only one on this list, actually, that I have no shares. This one's quite mechanical. You can see that it's up 7% on the year. That just means that it hasn't distributed all that income. But it kind of sells at the money calls, just slightly out of the money, a tick up above. It uses the CBOE Nasdaq 100 Buy Right Index, and it sells against the full value of the fund. So you're capping your upside. If I was going to buy this, I would certainly pair it up with QQQ and be long a little bit to give myself some growth. Because it's so mechanical and there's not a lot of intelligence behind it, I only give it 2 apples. It doesn't mean you can't utilize it, but it's just not my preferred way to go about investing. I think you've got better options. So it gets 2 apples from me. Again, I've talked about XYLD in the last video, and this one kind of follows the same thing. Completely mechanical. If you just want to put some money to work and pair it up maybe with some of the long, buying QQQ yourself, maybe you'll do all right. But again, not my favorite product. 2 apples, QYLD. And as I mentioned earlier, since some of these products have not been out for a full year, I did want to take a look at QDTE and how it performed with that 0DTE option strategy since inception compared to some of the other products that we talked about. So here we are looking at the total return, right? So the performance of the underlying assets plus all the distributions and feeding that all back in to get total return. We're looking at 17.36% for QDTE since inception. So pretty darn good. Best in class compared to Bally at 15.2, JEPQ at 15.6, and QQQI at 15.4. So you can see maybe that 0DTE option strategy is really paying off. But I'd still like to see more information before I'm jumping into it. But I know there's a lot of people that are looking at this early performance. They're very excited about what the future could hold for these 0DTE option strategies. Now this chart just pulls all the information that we just talked about together, and I picked QQQ as kind of our ticker that's indicative of these products. So I wanted to have some kind of control here to compare against as we talk through all these. So we have the inception date, assets under management, when these dividends occur. The only one that's not monthly is QDTE along with QQQ, which is quarterly. The expense ratio that we talked about, so you can kind of see how these stack up, which one's the highest, which one's the lowest, how it compares to something like an index. QQQ is actually not that inexpensive when it comes to an index. Year-to-date price performance and year-to-date total return, which kind of completely useless as we are at December 21st, 22nd, when this probably comes out sometime right around there. So we can kind of skip over that and go to the 1-year price return and total return. So again, there's a lot of this information that is lacking, but as time goes by, hopefully we can kind of build that out. So let's give you an idea of which ones have some growth in there and which ones have growth and income. So if we look at Bally, you can see the 1-year price return is pretty darn good. Add in that income as well, and wow, that looks really attractive. Whereas FEPI is the opposite, right? You've given up money as far as your price return here goes, but the distributions are so large that you actually have a positive return overall of 18%. So kind of wacky, a little out of whack, right? So you can see how those compare. So yeah, if we look at GPIQ here, we're looking at 25.83. We're looking at JEPQ, outperforming that, 26.77. So as far as 1-year total return, that's the best of these. QYLD is actually not doing too terrible, down there at 20.53. So although I gave that 2 apples, it's outperforming FEPI. Again, I'm just not a big fan. Sorry. If you're an owner, it's just not my favorite. QQQ, though, has beat them all at 29.3%. Now, as we get more information, we'll be able to fill out more and see exactly how QDTE holds up, QDVO, and QQQI as well. 3-year, we just don't have anything yet. And then you can see the distribution rate, which obviously people are very fascinated by as we talk about that. So from 0.55% all the way up to what I expect to be around 32%. And again, this is not a full year, so this is what I expect to end up around. Same with QDVO. So kind of extrapolated those out based upon the early distributions to get an idea of where they might fall. But understand that those aren't exact. I also summarized some of this information over here as far as taxes and things go, so tax treatment. So again, I'm not your tax advisor, so decide how you want to approach these. And it doesn't say what your tax is going to be, but it's long-term capital gains if I ever decide to sell my QQQ shares, right? And all the distributions or dividends that are going to come out of that are going to be qualified dividends after I own the product for a while. So how does it play out for the account that you're using, or is it in a tax-deferred account? This is Morningstar. They don't give us ratings. And that's one of the reasons that I often say, hey, go check out Seeking Alpha. I'm a Seeking Alpha affiliate. Their affiliate links down below. So the only one that we have is QYLD. It gave it 3. I gave it 2. But QQQ gets 5 stars from Morningstar. So you can see there's my Apple ratings. Very scientific. The underline that these are based upon, and the option strategy. Just kind of basic information about that. So as we were talking through it. So that's kind of a summary table. Take your time, check it out. Let me know what kind of questions you have about any of these products down below. And by the way, all the information in this table did come from Seeking Alpha as of 12/21 of 2024. So it will change on Monday morning as soon as we get moving again. But as of 12/21, this is the live data I grabbed from Seeking Alpha. So let me know down below which one you like, which one you don't like, which one I gave too many apples to, or which one deserves a few more. Feel free to criticize. It's okay. We're here to have dialogue, but be nice because it's almost the holiday season and everybody's watching. Happy almost 2025, by the way. That's probably the next time I'll see you. But if you like this type of content, please like and subscribe, and we'll talk to you real soon. Have a great night. Take care.